This is the main event of the evening.
See, that's the thing about Rick Ross. That's the thing about the boss. The metaverse, crypto. Y'all getting so much money. Where you at? Where you at? Show us. And I don't mean, oh, I'm trying to make money, man. I got a lot of money. I ain't mean that for you. But show us, show my homies what the metaverse about. One of y'all big boy crypto dudes, guru crypto, picture takers. Up and say, this what we gon' do, Rose. Where you at? Huh? Yeah, everybody giggling, looking around. All that fake rich money, where it's at? Educate.
Well, don't bring a leader in and have them not lead. Why would I argue with people who are getting paid by the guy? I'm sorry, I'm not gonna argue with people that are broker than me about money.
Now it's time!
Make sure I'm on mute first. Yo, what's good, Jam? It's good to be back here on the channel. It's been a while since we streamed, but it's good to be back with the crypto market, with the crypto rascals, the crypto warriors. I know we've been away for a while, had some life changes going on, but as the end of the year approaches, happy to get into some prices, predictions. I did actually make a list of our top picks for the year. So going into 2026, we can take a look and see how we do as far as our predictions. But anyway, good to be back. Good to be talking with you. And I think I just saw the Mavs pulled out that W over the Nuggets. So shout out to your Mavs in Dallas there.
Yo. Shout out to all the crypto rascals and crypto warriors out here. It is December the 23rd, 2025. Guess who's still outside? The crypto rascals are still outside. Shout out to Uncle Ray, Daddy Ray, Escherel. Shout out to myself. I'm proud to be back streaming, bro. Proud to be continuing to put the message out to the people, that financial markets are thriving. Stock markets, our traditional markets are doing all-time highs in 2025. We've seen Bitcoin pink and pull back significantly. But we'll get into markets, prices, analytics. We even have a few extra things due to your hard work. Asherelle, want to send a Merry Christmas out to all of our followers, subscribers. Please remember to like, share, and subscribe. But most importantly, want to send a Merry Christmas to you, Asherelle, to you and your blossoming, ever-growing family. I feel like every time we take a break, you pop out a new baby, or may I say queen. Aaron pops out a new baby, but nevertheless, congratulations, bro. I'm blessed to see your family continue to grow, and you continue to walk into your own being. All money is good money. But as my dad told me, we need more people. So thank you, bro, and blessings. Happy holidays to you. Glad to
Yeah,
be.
appreciate that, man. Yeah, about to have 3 under 3. It's going to be a wild time coming into 2026. So hopefully everything goes with that. Yeah, adding to the family. Not quite yet a basketball team, but we're getting there. We're
That
getting
was the
there.
dream, man. That was always the dream. For those of y'all who don't know, Asherell and I were boarding school roommates from the age of 14 and 15. And so we truly go back 20 years. And so we used to talk about, having a family. And the inside joke was, we want to have our own basketball team so we can pull up to the court and run it against y'all kids. And to see, between us, we do have a basketball team.
Hey, let's go.
And we can actually
Yeah.
have those things come into fruition. I do see some longtime friends in the chat. Shout out to Jake Fever. Yo, happy holidays to you as well, brother. Glad to see our friends who have been through various periods of crypto bull markets, bear markets, trading sideways during accumulation. And Jake Fever, man, I just want to shout you out on your merch, man. You still have the most fire merch in the space. Your creativity from your videos and content all the way to the merch, man, has been top notch, supreme. So just want to give you your flowers as we go into the year end. Wishing you nothing but blessings to you and your family as well.
Yeah, definitely. Well, if there's nothing else we can get into it. I know a lot has changed since we streamed last, so I'm excited to talk through some of the different numbers that I'm seeing, and then we can make some predictions, and let the people see how, and we can see how those play out over the next few months into 2026. A lot going on, but let's take a look. I think if you haven't already, you'll find some of these insights interesting, and then I think the cool part is just comparing some of the back end data. There's so many different tools to use now, which is pretty awesome as far as tracking wallets, inflows and outflows from ETFs, see what the DeFi space is doing with trading volume, also taking a look at centralized exchanges. So within all that data, hopefully, I want to hear what you think about with the different analytics, market sentiment, and how that's impacting potential prices. And then we'll get into some stories. So let's get at it.
Let's do it, bro.
All right, this section here is brought to you by The Block. Let's take a look at cryptocurrency prices. We can take a look at market cap, 24-hour trading volume, and then also, too, if we need to zoom out, look at how things are performing daily, and then take a look at if we want to say 7 days, maybe 30 days. The past few streams, Jams, I've been taking a look at 7 days, doing a comparison between how we're looking at a day out and then comparing that week over week to see how we're tracking. But considering that I just did a stream a few days ago, we can just take a look at the daily and let me know what you want to take a look at here as we go through the top 10. But I know this is you like to go through the prices, so I'll let you take it away.
Absolutely. Thank you for the intro, brother. We'll start at the top with Bitcoin. Big Daddy on the block, the big boy, the one that really matters. Bitcoin price sitting at $87,310, down just shy of 1% with a market cap of $1.7 trillion. Just shy of 50 billion in volume over the last 24 hours. Nice. One quick call out is nice to see supply circulating of 20 million. I read an interesting article earlier in the week as we get to the maximum circulating supply of 21 million, that as people die every day, there's more Bitcoin that will never be recovered because there are seed phrases that people die with. There are computers that they will never log back into. And so that real number of circulating supply, as we dwindle away from origination, the first block of Bitcoin, until maximum circulating supply of 21 million, that actual real number will begin to decrease, and you will actually see a deflationary Bitcoin as people technically die with Bitcoin on their wallets. How much of that will be in 10 years, 20 years, 30 years? So that hard cap is really something that will come into play long term. And then also what's more important about the Bitcoin price is I think it is truly going to be viewed as our digital reserve collateral in 2026. We already know large institutions are holding Bitcoin directly through ETFs and other structured products. So although Bitcoin has pulled back from all-time highs significantly from 126 all the way to 87,000, it is our macro hedge and risk asset. And so it's going to trade alongside tech and liquidity as a whole in the macroeconomic cycles. But if you want strength, you really want to hold cryptocurrency, that's where you cannot go wrong long term. Secondary, Ethereum trading at $2,944 per Ethereum, down 1.63%. Of course, as the cryptocurrency markets show some volatility today, Ethereum will show more volatility than Bitcoin. However, when we think about Ethereum, it has truly become our tech layer. It's a settlement layer. It's our collateral backbone for DeFi, and it's a way for you to bear yield through staking. So although it is narrative driven and a lot of that hype has died down from DeFi summers of 2021, but it's number two. And as the market matures, meaning the cryptocurrency market as a whole, you'll want to have your capital inside assets that actually are going to do well long term, as the premature days of speculation and 10,000x is truly over. In my opinion, nothing that we say here is financial advice, truly just two long-term friends having conversations publicly that we otherwise could have privately. Number three, of course, Tether sitting strong with a market cap of 186 billion. Saw a week ago, there was some Tether FUD, but I feel like every other week there's some Tether FUD and then nothing happens. So more important, BNB, CZ. I nicknamed 2025 crime season, and CZ has had a hell of a year despite Bitcoin pulling back. If we could look at a larger time frame, let's say a year time frame or six, let's look at CZ look at CZ showing out on y'all. Ain't nobody been paying attention, but while the rest of the market has pulled back, CZ went on a crime spree, allegedly. And people may not realize that the strength of Binance being able to not only have a launch pad, but also a wallet, a truly integrated system with approvals internationally for regulators to allow them to operate. I don't know how you bet against them. You know, when BNB was trading around $300, everybody was laughing, calling him a criminal. Well, shit, it just pumped up to $1,300 per coin back in October. So it's only
we're gonna talk a little bit. Yeah, you're right. We're gonna talk about that a little bit more and some insights into CZ. He just got pardoned by the Trump administration, so That platform is making waves internationally, and it's probably going to have a huge impact to also how the U.S. handles certain situations in foreign policy
Could
as
not agree
well.
more. Trading at the fifth spot today, XRP $1.86 with a market cap of 112 billion. I do want to mention XRP briefly here because this brings me back to a larger point in the market itself, which means the market psychology truly has matured. When we think about our altcoins and our market breadth, yes, there are thousands of altcoins, and I would truly consider XRP a altcoin. Anything that is not Bitcoin, in my opinion, or Ethereum is a altcoin. Possibly you could put Solana into that category, but there's not much else I would put into that category. And that's just my personal definition based off of how confident I am in that coin's ability to perform long term price standpoint and also from a technology standpoint. But let me get back to my point. Fewer altcoins will matter in 2026 and forward. 90% of tokens from our prior cycles will be economically irrelevant by the end of the year. So you're going to see capital start to concentrate into your top layer ones, your true infrastructure and real revenue protocols. So this rotation is going to happen fast. And when it happens, you won't really see a change in our top 10 so much, but you will start to see Cardano fall out. You will start to see Dogecoin become frankly irrelevant. And if you aren't actually producing real revenue, you aren't a real layer one with actual traders doing real things. If you aren't a infrastructure play like Chainlink, you're not a DeFi protocol, you don't have real world assets, and there's no access to stablecoin liquidity, no one's going to speculate on your bullshit anymore. Those days are over. Excuse my language. Those days are truly over. And I wanted, and that's why I called 2025 crime season, because after crime season comes law and order. Yes, regulation is a good thing, but with regulation, you're going to have major jurisdictions defining the rules that we have to play by, and innovation is going to have to move inside those rules. And as compliance comes, cost is going to come. And that favors the large blue chip players inside this top 10 who actually are generating real revenue with real users and actual value.
Yeah, hold that revenue thought, because that's something we've been taking a look at too, fees generated, and we'll take a look at that here in the next portion of the show. But yeah, go through some of the others here that you picked out from XRP, USDC, Solana, Tron. You talked about staking with Ethereum.
Yeah, I'll give the people a few more here. Solana is what I would consider a blue chip who has a ETF. So there are institutional players who will be holding it. And it has survived its second cycle. I do think for the number of users on chain has dropped dramatically since the meme coin frenzy. But this goes to my point that the days of 10,000 X's on Duty coin probably won't happen anymore. However, you still should be buying the layer one coin of Solana, because there are ETFs available and institutional players need a way to settle funds quickly. And sorry to tell you, Solana, although has had 2 interruptions, it is still fast. Transactions per second are still quick. And guess what? It still works. And you can stake it. And guess what? If you're not getting 4.3% or more on your just for holding Solana long term, you're losing. Is it inflationary? Absolutely. That's one major knock on Solana, is that it is inflationary, and although the inflation rate is going to start decreasing here soon, total supply is almost infinite. And so validators are also leaving the ecosystem because they aren't really making a lot of money. Nevertheless, when poor validators leave the ecosystem, that just opens the door for institutional players to come in, run their own validators. And to me, it's not the market to bet on the underdogs. It's time to ride the wave with the bigger ones and stop saying that we don't want to be with the institutions, we don't want to be with the banks. Well, you need their liquidity and you want their participation because you want your bags to appreciate. So you can't have it both ways.
Yeah, you're right. Well, that's a good place to leave here and jump into some more insights here that will probably back up what you were saying, and we'll take a look at DeFi Llama here. This one's good just to take a look at. You can take a look at a lot of different metrics, whether you wanted to take a look at stablecoins, total value locked on all these different chains. Since you were talking about profitability, we can also see the fees paid and generated by some of these different protocols and blockchains. And then if so, we wanted to take a look and see what's impacting the price of Bitcoin. We could take a look at some of the digital asset treasuries, inflows and outflows as well. And we could take a look at some of the decentralized exchange volume just to see how people are interacting, and ETF flows here as well. So let's just start with fees paid. Click on this one here.
And can I say,
we can see
before we jump,
go ahead.
I think it's very important for people to have context on DeFi specifically, because DeFi had a negative connotation after DeFi summer. However, DeFi survived, and decentralized finance is going to be boring or become boring. And this is something that you were talking about 2 years ago, is that the focus areas of stablecoin liquidity and on-chain credit rails was going to become very important. That this was not just speculative casinos with random coders, but that this was real on-chain financial plumbing. And so while the retail DeFi hype may be gone, institutional DeFi is here, it's real. And I love that you have this aggregator of DeFi Llama or dashboard to analyze and look at how impactful in numbers DeFi actually is, because here is where the rascals and warriors can begin to look at altcoins outside of Bitcoin and Ethereum that they may want to potentially begin to play around with, familiarize themselves with, or even invest in themselves. So just wanted to set that up with some context, because this portion of the show is really important.
Yeah, and just to build off of what you were saying too, for specifically here, if we're taking a look at these particular protocols, we see the top two, Tether and Circle, when it comes to talking about stable coins, those tokenized US dollars. And you talked about previously the aspect of if your protocol or your blockchain or project that you're working on doesn't have that stable token, stable coin liquidity from the US dollar, it's kind of like your DOA, your SOL, essentially. Yep. So that's an aspect I think to think about when it comes to decentralized finance, when you were talking about the rails and the rules of this new regime, this new cycle or new cycles that we're going to start experiencing with the passage of the Genius Act. And I think they're working on the Clarity Act just to define the rules of crypto and give blockchain different specific definitions, legally speaking. So I do think the aspect that probably doesn't fall under regulation is the DeFi space. And what you probably mean by DeFi, decentralized finance, is the aspect of people who are custodying or self-custody have their own wallets and access to their particular tokens and blockchains through their own means and not centralized exchanges. So with the breakdown of these smart protocols and smart contracts on the different blockchains, that's probably the part where it's a little bit going to be in the wild west, so to speak, where there could be a little bit more innovation. Banks can plug and play, decide what they want to offer their particular customers. Banking institutions or private institutions that want to get in on the crypto space and do a little bit of banking, whether they're offering specific payment systems or savings accounts utilizing tokenized dollars that are flowing across. I think what we're trying to look at and figure out as we call them stable coin wars are approaching, and even this leads into the aspect that people talk about World War III. It's just basically the payment rail systems of the entire world are being changed over and changing hands, and it's kind of a race for who can control and innovate on those systems. So that's probably where DeFi comes into play, where it falls out a little bit outside of the stringent regulation, where it's going to bleed into traditional finance, but it's going to impact all of our lives, particularly on the payment side, e-commerce, supply chain. So that's why I think it's interesting to take a look at these and see what's important, what the trends are.
Could not agree more. You were the first person who was being brilliantly boring and saying, "Hey, man, stop caring about the meme coins. Stop caring about all of the, crazy altcoin frenzies that were happening. You need to pay attention to stable coins and Zcash." And I'm like, man, privacy coins are boring and stable coins are even more boring. And guess what? Those were the two biggest things of 2025.
Yeah, it's funny. As crypto, as they say, there's mass adoption. It gets boring. So it's like you get mass adoption or institutions coming in, and it makes it boring. Just like any traditional finance, right? Just like your Vanguard, your Fidelity portfolio. Not, it's interesting, but it's not as exciting as it was, let's say, 2017 to 2023.
Yeah, I could not agree more. Like our market structure and behavior has, I probably said this 3 times now, has truly matured. And like we're out of our experiment phase. So like we don't have to debate whether crypto is going to be a part of the global financial system. It's how much of global portfolios are going to be allocated. One real world concrete example is Harvard. Harvard's endowment, several $billions. Their largest holding is what now? Bitcoin ETFs. So they are looking in 20, 30, 50-year forecast horizons, and their largest bet is BTC. Harvard has the largest endowment of any university in America. And so if that's how the wisest investors in America are positioning themselves from an allocation standpoint, we're no longer experimenting. It's real. It's how much exposure is optimal for each individual and how much risk are you willing to take. And the other portion, so we can get into DeFi, is the market isn't monolithic anymore. So like now markets are truly broken into, our top big boys, BTC, ETH. We got our stable coins. We have DeFi markets. We have altcoins. We have NFTs. We have gaming. And all of these are priced as different asset class with different levels of risk. All crypto is not created the same. So let's talk about liquidity, numbers, fees, so people can start to distinguish between some of these DeFi protocols and or altcoins that are in the marketplace. One I want to call out first is Hyperliquid, a derivatives market. Hyperliquid has really popped on the scene in 2025. And for the sophisticated traders out there who are trading perps, and they are absolutely playing a game. There are a lot of whales in the hyperliquid space. So that's one protocol that I see growing in 2026. I don't think that pump fund will grow into 2026. I think the meme coin frenzy reached its peak with the launch of the Trump and Melania coins. I think retail investors have been scammed for the most part when it comes to meme coins. And I think it did reputational damage and harm to Solana and Pump Fund as a whole. But boring. What's at the top? Tether and Circle. What jumped out to me is Tether has 3 times the fees collected of Circle. And that's talk about market share dominance. That's kicking the ass, running circles 3 times, running circles around Circle, pun intended. So
yeah.
We back in 2021, we were having these conversations, who's going to win the stablecoin wars? Well, I think we have a winner because, like, from a fee standpoint, they are paxing them. But when market cap, that was starting to get close. We got to go back and look at the market cap charts. We ain't got to do it right now, but at some point, I want to go back and look at how close their market caps were. Because if this is how much the fee difference is, then yeah, I think they're passing them. There's 2 other things that jumped out to me here. I want to look at ETF inflows and then DEX trading volumes, because those are the 2 things to me that indicate the health of that particular protocol or that particular chain. So if we look at ETF inflows, basically when Bitcoin inflows flip negative, meaning less money going into BlackRock ETF, Fidelity ETF than what's coming, less money going in than what's coming out, more selling than buying. That is a huge indication of what the Bitcoin price is going to do, because you now have $2 billion being traded daily on IBIT. You have $283 million being traded on the Fidelity ETF, FBTC. So we're not talking 1 or 2 ETFs. There's at least 10 right there. And just in the first 3, you have over $3 billion in volume in one day. So you have to pay attention to BTC ETF inflows, because those are key indicators of what price is doing and what it's going to do. Because where are institutions buying Bitcoin and Ethereum? Where are they gaining exposure? They're gaining exposure through ETFs. Where are your family offices getting exposure to Bitcoin and Ethereum? They are through these ETFs. And so as the inflows go, so will price.
Yep. Well said. Well said. We did a breakdown a few streams ago looking at Amber data. I'll pull them up here at the end of this section. But you said, yeah, stablecoin market cap, fees paid. Let's look at DEX volume. Is that the one you want to take a look at as well?
Volume is very important as well, because you want to actually know how many people are trading on chain. It's very hard to know the true numbers inside Coinbase. It's very difficult to know the numbers inside Binance. But what it's not hard to know is how many people were trading on PancakeSwap, how many people were trading on Uniswap in any given day, how many people are trading on Humidify. Humidify came out of nowhere. This is another one that, like, that's why I hope the crypto rascals and crypto warriors take notes or actually watch our streams, because who's talking about Humidify right now? Nobody. And they came out of nowhere on the Solana chain. I believe they have like over 60 to 70% of all DEX volume today on the Solana chain. everybody thinks, oh, the big DEX on Solana is Jupiter and Meteor.
Yeah.
No, it's not. What does DeFi Llama and the numbers say? The numbers say they doing 30 billion in volume over the last 30 days.
30.
Almost three times as much as Meteor. How many people got humidify in their wallet right now? Not many. And I was just looking at the price down bad than a mug. So you could accumulate for the low and know that you have the premier DeFi protocol on the Solana chain in your wallet. That's how you win.
Yeah, good call out there. I was not familiar with humidify.
Aerodrome's another one. Aerodrome is on Base chain, so it is the top DEX on Base. If Base, meaning Coinbase's decentralized chain, it's layer 2 on Ethereum. If Base does well and takes off, well, Aerodrome is something you could also accumulate for the low, because anybody trading on chain on Base is likely going to be utilizing Aerodrome as their DEX. And so, to me, DEX volume is a easy way to pick out altcoins that are going to do well, because there are real people using them. There are real fees being collected. And as the market continues to mature, it is all about ensuring that you have your money positioned in financial infrastructures that have real things going on. No more, the games are over. That's the best way I can say that. The games are over.
Yeah, that's a good way to think about it.
And I gave them 2. Let me see if I'll give them. I'll give them a third one. Curve. I really like Curve, just for ease of use. I was able to trade my stake. Let me make sure I get this correct. I was able to trade my staked link on Curve with very low friction. And so I would also recommend Curve as a DEX out there for those who are interested in decentralized exchanges. Obviously not financial advice, just something that I have personally used.
Yeah, good call.
Those are the 3 that I called out. If you go back to the list, I may see one other. We'll give them a wild card. Kalshi, that's what I wanted to say.
Yeah, Kalshi.
Yeah, you take prediction markets, because I have a very biased opinion. So you go ahead on prediction.
I mean, I don't know if my opinion may be biased in the other way, but first I'll say it's a trend right now as far as the prediction markets. It's a workaround, you could say, legally. It's not necessarily gambling. From what I've heard and explained, it's because you're not betting against the house. You're betting against other people, and the house is just basically the person who's organizing the bet or trade, so to speak. With prediction markets, basically the idea is, let's say you wanted to bet who's going to win the election, any type of event, you could put their odds put out by a platform, say like Kalshi, and then you could decide if you want to bet those odds or not. So Kalshi is making waves. I do believe they have a partnership with Robinhood, and the way prediction markets are regulated at a federal level, that you kind of skirt around some of the different regulations that hit gambling sites. So that's why I think there's a big push for prediction markets, because it kind of maybe scratches that itch of people who want to gamble. You could say it is similar to gambling in some sense, but from what I've heard and explained from people who are working on different prediction markets, is if people are putting their money where their mouth is and like actually betting on the outcomes of things, prediction markets can be a good way to, no pun intended, predict what's going to happen with certainty and understand, how true things that we see in the news are. One example I heard was when there was that toilet paper outage at the beginning of the pandemic of COVID, you know, people were rushing and buying certain things in the stores, and the prediction was at that time, okay, if this was really a pandemic that was going to wipe out and kill a bunch of people, why wouldn't the vitamin C be gone? Why wouldn't the elderberry be gone? Why was all that stuff still on the shelves, but everyone went and got toilet paper? So that could tell you right there of like, oh, COVID is not the big deal that people are saying. So that's kind of the idea when it comes to prediction markets, that idea of being able to see make a prediction, actually put a good percentage on it, and also if you have good knowledge and information about what may happen, profit off of it as well. Now, I would like to hear your take, because I was listening to a CoffeeZilla guy. He was eviscerating prediction markets in a video that I saw. But yeah, what are your thoughts on Kalshi and then the trend of prediction markets overall?
I think Kalshi, poly market, prediction markets in general are trash. However, I do agree with your point that asking people to put their money where their mouth is will lead us closer to predicted outcomes, as people are less likely to say bullshit on as they do on social media, as there's nothing holding them accountable. If they got $5,000 behind what they're saying, then maybe it will be beholden to the truth. So I agree with you there. But the reason why I think they're trash is this, if you look at the volume, reminds me too much of FTX. This 100% reminds me of Sam Bankman-Fried and his boys money laundering on behalf of whoever they were working for. And I've seen the CEO
he was on 60 Minutes.
Take the same trajectory path that I saw Sam Bankman-Fried on when I predicted that was going to fall. So, and he also has a Caroline running beside him as well. So it's almost like they are trying to.
Wait.
Oh, you haven't seen the Caroline of Kalshi?
I saw something that the newest billionaire or something. I don't know. But
yeah, that's her.
Does she look like Caroline or not?
Yes, that is her. That is the girl I'm talking about. So
we gotta do a comparison.
I haven't done my deep dive.
Not now.
I haven't done my deep dive to either one of them yet, which I will do between now and the next show, since we brought it up. And typically, I will have done my deep research before talking on the subject. However, my feelings generally aren't good about Kalshi. Like, I truly have not spent a single dollar on a prediction market. I do feel that it's degenerate gambling for the most part. Do I care if Taylor Swift is the most streamed artist at the end of the year? Absolutely fucking not. So excuse my language. Again, I just don't believe that we should be wasting real liquidity on things that do not matter, when there are actual real protocols out there generating revenue, have yields. I mean, like Helium Mobile, you can make a phone call. Like, why? I can buy Helium for less than $2 and I can have a cell phone bill for less than $30. Like, Kalshi, I can just predict whether like JD Vance is going to be president in 2028, and then we're going to create this huge bubble of money around this one thing, and then you're going to get fees off of all these people trading. Yes, I mean, it sounds good, but to me, that's just
I hear you.
Early market nonsense that will ultimately get washed away, and hopefully we don't all get wrecked.
Yeah.
I don't want to be collateral damage to that. That's just how.
Yeah, I get it. I get what you're saying. With these centralized platforms,
I got scars from the past.
So you're saying Kalshi CEO is running the Sam Bankman-Fried playbook. So is he going to fund the next election? Is he going to fund the Democrats? Is he going to fund the Republicans? What's he going to do?
Kalshi C. Tarek Mansour, that's his name. So I'm gonna do my research
All right,
into.
well, we can come back with that.
Yeah, we're gonna do
Sure.
our research. Oh man, it's already not looking good. It's already not looking good.
Hey, that 60 minutes interview is the kiss of death,
Hey,
so to speak.
hey, we starting off with grew up in Lebanon, studied at MIT. We already not looking good. That's already not looking good.
What do you mean by that?
The Lebanon to MIT pipeline is real close to anti-Semitism, so I don't mean nothing by it.
All right. Let's move on here. Last quick thing. I know we spent a lot of time on the analytics section, but it's interesting. Gives some good insight. So Messari.io gives us this markets sentiment and signals tracker. This is the 30-day outlook, month outlook, and you can see they'll pull a bunch of data tracking, news headlines, what people are saying on social media, and a lot of other different information just to go over what are the topics that people are interested in when it comes to the blockchain space. And you can see how things are performing, what percentage share it takes up, and then also its improvement. So DeFi up 13.99%. Overall mind share, you could say what people are talking about in sentiment is around just over 10%, 10.9%. And then AI, blockchain infrastructure, stablecoins. So we don't have to spend too much time on this. I'll just read here what it says when it's talking about the DeFi mindshare. So the DeFi mindshare, it said, so the recent surge in DeFi activity is fueled by attractive high-yield opportunities, including Meso Network's 40% APY for BTC lockers, interesting there, and broader strategies offering up to 500% APY alongside the significant growth of layer 2 solutions, with Base reaching 4.4 billion in total value locked and Arbitrum holding 2.8 billion. This expansion is further driven by a 54% increase in on-chain borrowing led by Aave, with 20.6 billion in active loans, and liquid staking growing 20% to 57.6 billion total value locked, now representing half of all DeFi activity. So take that with what you will, and we'll get to some stories here. And some of the stories that we'll talk about will probably add a little bit of qualitative context to, I think, some of the numbers we've been looking at when it comes to the blockchain prices, inflows and outflows, as well as, you could say, the geopolitical impacts of stablecoins too. So any thoughts on what we see here with
just one quick thought. Earlier I mentioned how crypto is not monolithic anymore and that we have different asset class. Here is a visualization depicting that point. You can see that our AI, our DeFi, our layer 1 networks, our blockchain infrastructure, our stable coins, all of these sectors, as they would be called in the traditional markets, are available in the crypto markets themselves. So while the total market cap of all sectors is 3.13 trillion, DeFi is up, AI is up, stable coins are up. It's our layer 1 networks that are down, and blockchain infrastructure that are down, pulling the entire market cap down, understanding the proportional size of each one of the sectors. If there's one, I'm glad you went there. There's one area where we could see a tremendous amount of growth over the next 5 to 10 years. The DePIN sector is what I was talking about in reference to helium. There is going to be a growth in real world use cases and the valuations of them. So when I think about um, areas where you can find discounts and the ability to maximize your long-term gains. DePIN is an area where I would look. An area I wouldn't be looking is NFTs or memes. I would leave those alone. Probably wouldn't spend too much time in gaming, but blockchain services, DePIN, I definitely click around in there and see what are those top coins. Try to find the top 2 to 3 in that sector for 2026. And then, of course, we're DeFi. I truly believe that analysis from Asari is right. Aave is the gold standard when it comes to DeFi, lending and loaning. If you haven't downloaded the new Aave app, you should probably go ahead and do that. Crypto Rascals and Warriors to get on to the wait list. Not financial advice, but does give you the ability to earn yield passively on your cash, giving you exposure to DeFi in a traditional sense, like a savings account. So Asherel, what else you got for me, man?
Yeah, that was good. Hey, like I said, like, share, subscribe, y'all. Drop a comment if you want us to take a look at something else next episode, whether it's a protocol, a blockchain. And then, yeah, let us know what we're missing when it comes to looking at the analytics section. Anything you're looking at in relation to ETF outflows, the digital asset treasuries, DEX volume, or anything that you think is interesting and insights there that you think that we should add, or anything that you like, feel free. But yeah, definitely drop a comment, like, share, subscribe, or if you hate it, let us know that too. Okay. All right, so this is a little bit old, but the Liminal Millennial Report brought to you by Crypto and Down. So we have a December edition here. We're going to talk about federal government guidelines for banks, legacy payment systems, partnerships with blockchain protocols, and the impact of stablecoins in Venezuela, which is probably the top story that we'll get to last that I wanted to highlight. I know I did make that the thumbnail, a little bit of a teaser there, but we'll get into that here. But let's move on. So what is interesting, at first, Jams, you were talking about, the big players coming into the space. There have been a lot of moves with different banks starting to utilize stablecoins. The SEC announced that they're going to start allowing more, let's just say, exploration of tokenization when it comes to securities. But JPMorgan launched a tokenized money market fund on Ethereum. So they entered the tokenized asset space with MONY, and that's the first blockchain-based money market fund. So that's pretty much a great, you could say, milestone when it comes to blockchain banking. It's also interesting considering that their CEO or president, Jamie Dimon, for the past, decade or so, has been poo-pooing the entire blockchain space. But what are your thoughts on this particular move?
I think about it in basically 3 buckets. So you mentioned the real important part here, and I'll get to the slides in just a second, but I want to make a couple of points. Is that you mentioned tokenized real world assets. They are finally here and they're real. And so by the end of 2026, you will have tokenized treasury bills, credit products, commodities, and these will be issued on chain, and this will be settled via smart contracts. And so it's like all of these things will create lower volatility and you will have predictable yields. And so what else will matter is the boring thing, stable coins. And so with JPMorgan being in the space, earning yield on chain and having a public blockchain that they are able to access and move money in and out of and sell as a product through subscription, which is huge, is another revenue stream for them. And so I think the only thing missing, which hasn't happened yet, is the final regulation clarity. I think once we have clarity from regulators, which I think will come next year, that will push out a lot of smaller players and consolidate power to the top. And that's going to favor the incumbents who have money to spend. And who has more money to spend than JPMorgan? Almost nobody.
Yeah. John Donahue, head of global liquidity of JPMorgan Asset Management, he said that with Morgan money, tokenization can fundamentally change the speed and efficiency of transactions, adding new capabilities to traditional products. So not to be lost in all of this, I think the fundamental reason why they would do something like this, because it is faster and cheaper, essentially. So that's what blockchain brings to the banks and why there's a rush to stablecoins, tokenized dollars, but also the underlying technology that they run on blockchain as well. Some more insights here from this particular announcement from JPMorgan. So they're going to invest in U.S. Treasury securities and allow qualified investors to earn yield while holding the token on the blockchain. So that could be interesting to see how interest rates will affect the profitability of these different models for stable coins and the banks that are issuing these stable coins. If they're able to go and buy treasuries or securities, or corporate securities with treasuries, the price of, or let's say, what am I trying to say? With interest rates being higher, that could just be more earning potential for the banks as well. So there was, people sometimes expect those to drop, but if they go up, it's not bad for certain players here as well. All right, let's move on to the next one here. Also JPMorgan. So JPMorgan arranges commercial paper issuance on Solana. So we talked about, there's the stable coins when it comes to the aspect of tokenized dollars. And when it comes to, tokenization of real world assets, one thing that can more easily be tokenized, it would be securities, maybe your stocks. Having that on chain would be, I think, a huge game changer to the market, where since blockchains are live 24/7, people wouldn't be stuck between the regular trading hours that we find with regular stocks as well. So JPMorgan still making waves with the Solana blockchain, as you mentioned earlier, being one of the premier blockchains along with Ethereum when it comes to these institutions adding on and deciding different, let's just say, business plans that they can implement utilizing a blockchain. So one of the earliest debt issuances ever executed on the public blockchain, and one of the first to harness blockchain for the issuance and servicing of securities. So JPMorgan seems to be one of the first movers in that particular aspect. Also the interesting part too is the issuance and redemption process will be paid in the USDC stablecoin issued by Circle. We just took a look at Circle, seeing some of the fees, took a look at the trading volume and its market cap when we're going through the top 10 on the block.io. So another win for Circle and JPMorgan as well.
What stuck out to me there was who JPMorgan worked with. Galaxy Digital Holdings. If you recall, that's Mike Novogratz' company.
Oh,
and so right. I think it's important when we see headlines or stories like that we think about the players and who's involved and their reputation long term. And then another thing that stuck out to me here is USDC stablecoins being utilized on Solana due to Solana's high speed. So when we think about stablecoin wars, we also have to think about stablecoins in a multi-chain world where USDC is not limited to just Ethereum. USDC lives in a multi-chain world and has the high speed throughput available of Solana as well. So I think it's important that we use these data points as validations over time to see that Mike Novogratz is still working as he was back in 2020, and USDC is continuing to expand itself, becoming multi-chain, meaning that access to liquidity is deeper than it was 5 years ago. So that's evolution and progress in markets. And those are the things that I look for when I am trying to determine whether to be bearish or bullish long term. So great data point.
Good call. Lagging a little bit. Let me get to the next one. Low. All right, is my connection good?
I was going to
hear
say
me?
I can see it fine.
Okay.
Yeah, I can hear you and see it.
Okay. This falls along the lines when we talk about the regulation. So since the Genius Act passed back in June, I think was signed in July, the FDIC now has a proposal to banks on the issuance of stablecoins, and is trying to lay out like a regulatory framework, offer consultations, and then issue and talk to them about like the structure of what banks can do. I didn't read through the entire list, but I think some of the things to highlight is that, they'll allow banks can issue payments, stable coins through subsidiaries. That's interesting too as well, because not necessarily they're a bank, but I was a few weeks ago, I was highlighting the fact that Sony is also launching their own stablecoin, which, that's a whole nother story issue as far as the impact to bringing stablecoins to gaming and allowing people maybe to earn in that particular platform and ecosystem of Sony games, PlayStation, or what have you, to be able to maybe take some of those earnings that they make, tokens in different games, and bring them to the real world for spending. But the way the Sony had gone about it was they had a subsidiary company in a bank that was issuing their stablecoin. So the FDIC, since there are now actual laws passed by Congress, more to come with crypto and the Clarity Act coming soon, we're going to probably see a little bit more insight and, I guess, laying the groundwork by these different federal agencies like the FDIC having some of the clear-cut proposals for banks.
Yep, I could not agree more. This was your big call out years ago that stablecoins were going to be the most important part of the cryptocurrency markets. And slowly, stablecoins have proven to be the quiet winner. And I do believe that you're right, stablecoins will outperform every other narrative besides Bitcoin. As stablecoins, of course, are going to be used for yield, but they will be widely used for remittance payments, cross-border payment. Stablecoins are going to be embedded into your fintech apps. You're going to have U.S. banks issuing individual stablecoins. You're going to have corporate institutions, as you just mentioned, Sony, amongst many others, issuing their own stablecoins. And this is adoption without necessary branding, because people want fast, cheap transactions. And the flip side, banks, companies want fast settlement, as no one likes money tied up on rails and infrastructures and payments. We want finality and settlement immediate.
And the reason the rules are coming out about stablecoins, that kind of ties into, yes, the US as the issuer of the global reserve currency, the dollar, are going to do everything that they can to maintain that power. So while they may leave, depending on the protocol, like if it's Ethereum, if it's Bitcoin, they may treat those type of blockchains a little bit differently. I think they're worried about Bitcoin in a sense where maybe they're worried about how much money they can make off of it. But what they're really keen on is the issuance of stablecoins and figuring out a way to fund U.S. debt. So what stablecoins do, the issuance of stablecoins, and with the passage of the Genius Act, the interesting part there, laying out who can actually issue stable coins and what those basic rules are. Basically, they're allowing public institutions, states, cities, municipalities, banks, and private institutions as well to issue these stable coins, and they hopefully, they can seep out into the world, and people who are utilizing these tokens in different countries are basically funding the US debt, because as an issuer of stablecoins you'll have to go and use those funds and dollars or money that you get to go and buy US treasuries as well. So the Secretary Scott Bessent, Secretary of the Treasury, I think that's he is Secretary of the Treasury, Scott Bessent. That's one of the big things that he's talked about as well. So, and it all ties back to what we were talking about a little bit earlier when it came to CZ. I'm going to skip over this story and come back to it as well, but since we're running out of time here, but I'm kind of on a tangent here. But let's get to the last two, which were mostly interesting. This one highlights the aspect of DeFi and then also stable coins. So we were talking about at the beginning Binance and CZ. CZ just got pardoned by the Trump administration. Trump launched his meme coin, him and Melania, but they also launched WLFi, World Liberty Financial. If you take a look at the insight of what's happening in Venezuela as well, a lot of people there are utilizing the US dollar and the Tether version, the USDT, to do a lot of their basic peer-to-peer payments and transactions, whether that's going to the mechanic, maybe going to the doctor's office, since the Venezuelan currency has seen such a dramatic inflation and is losing its purchasing power. So a lot of people are utilizing Binance as a bank, maybe basically for checking and also for savings, in a way where, since their currency is losing so much value, they're able to use USDT just for basic commerce. A lot of people are doing that in the country. And so what was interesting here from this article from Cointelegraph, it said over 38% of Venezuelan sites visits to platforms offering P2P trading functionality via intermediaries like Binance. This article that I read, it did name Binance, but that was one of the ones that people are utilizing. I've heard this first even from a group chat I'm in for counter markets from a particular developer who's in Venezuela and talks about its use there. But if you dive deeper and want to go and research what's happening in Venezuela, there's a lot of stuff that's happening in the news. But when you get on the ground and think of how people are kind of rejecting their own currency to utilize the US dollar on a tokenized blockchain platform, you can tie it into the fact that they're utilizing Binance. Trump just pardoned CZ. Trump just launched World Liberty Financial and his own stablecoin, USD1. And then not too long ago, Binance stopped using their own US dollar stablecoin, BUSD, and switched over as a ticker for all the dollars on their platform to be denominated in the USD1. That is Trump's token. So basically, if you look at it, people in Venezuela are probably going to start utilizing Trump's token on the Binance platform, because their own dollar is not as good, essentially. So geopolitically and all the posturing, we're taking their oil, we're blowing up ships. Aspect too that people aren't really talking about and that goes unseen is the fact that they're utilizing the US dollar, and then Trump has come in working with CZ to be like, hey, now they're utilizing Trump's own dollar in Venezuela, not just Venezuela, a lot of different countries. But talk about a huge power move that's happening, not only with the president, different banks, fintech. It's crazy to think about.
Yeah, geopolitics are definitely at play when we talk about stable coins and cross-border payments and the devaluing of currencies due to inflation or potential war. And so I think that's a very poignant article and very important as we travel down, and start to look at what's happening at the world, what's happening in the world at large. Something else that I just quickly wanted to mention that you made me think of as we start talking about Venezuela is I think it's important for us to remember that 2025 marked a period where we saw lots of anticipation early on in January for the election of President Trump. We got the crypto president, and the crypto president launched a meme coin and dumped on retail ahead. You did mention he also launched World Liberty Financial. You also mentioned that he launched USD1. That's why 2025 is called crime season, in my opinion. You mentioned CZ changing stablecoin from his own company stablecoin to the same stablecoin of the person who pardoned him. 2025 was crime season in the markets. However, 2026 does not need a grand story or does not need co-option by the elite. It does not need crime. At this point, we can all assume that the capital in the market will continue to grow. And so as capital inflows continue to increase, we will see volatility not only decrease, but we will see more institutional positioning. That means more pension adjacent capital. That means more structured products. That means more balance sheet exposure for your corporate entities. All of these things are going to come into play. And so the crime that we saw in 2025, I don't think will happen as much in 2026. And although the easy trades will be gone, risk will be managed, and it will be all liquidity driven, mostly because of stable coins. So great story that crosses many different weaving narratives inside the cryptocurrency and global financial markets and political space as a whole. So we can skip that last one.
I do want to talk about the last one. Okay. I have some. It kind of touches on what you were saying, but shout out to Only Bitcoin T4X. He said, "What's a crack-a-lackin'?" Also said, "Stablecoins are like eye drops. When used correctly, they cause great relief. When used incorrectly, you end up with unexplained diarrhea." The banks and regulatory agencies will more than likely pass the intestinal trauma to us, but I would love to be proven wrong. Yeah, with that kind of touches on what I was saying with what you were saying too, with the Clarity Act and the clear rules being set, but DeFi kind of falling outside of that purview of basic regulation. It's setting up some interesting ways these banks can do things like they could say different instruments for financialization, whether mortgage-backed securities, futures, perpetuals, all that stuff. It's be interesting how they package some of that utilized with the DeFi space. I did want to talk about the last story because you talked about just the different blockchains, the different protocols. How are they ranked? What to consider if you're going to look at purchasing some of these things. I think there's a clear difference between speculation, also investing, and that line is definitely blurred when it comes to the crypto space. Sometimes what people call investing can be speculation, and also the way that we look at as far as these different tokens for a particular protocol like Aave, where the tokens are meant to give you as a holder voting power and deciding what happens. But also too, there's that dichotomy between you as a token holder who maybe are supposedly given some rights or through a DAO, a decentralized autonomous organization, to be able to vote on what the protocol should do. But then there's also the people who are actually developing and working on the protocol and the things that they want to do. How are they earning money? Are the fees from the protocol going to the token holders who are just holding, or are they going to the people who are developing and working on it? So this particular story from Aave was in DeFi Llama News, but it was just basically a war kind of between the the I could say the main developer leader president of Aave and the people who were like the face of the DAO, a lot of the token holders. So basically, the people who were working on on Aave, they wanted to create an interface and add a way for them to generate fees through utilize that would go to them as like the developers, utilizing like a different website or user experience. And a lot of the people who who are token holders didn't like that, because they're like, hey, we're the ones who get to vote on certain things. We just probably voted to have a new change to the logo and do a rebrand. We should be getting these particular tokens. And the response from the president was kind of like, hey, well, you as a DAO are more than welcome to create an interface, a user experience interface, and develop that on your own. But it's a long story, and if you're in these different forums, there's a back and forth here. But I think what I wanted to pull out and highlight was just the nature of what are you actually getting by holding a token. Does it actually give you some power or like a voice to vote on things that actually make a difference? And the struggle between the synergy that probably is being sought between people who are developing on these different protocols and the people who are holding tokens. So that is something also to consider, where don't approach this like you would like a stock, where maybe it's paying you a dividend of some sort. You have to approach it and try to think creatively outside the box, utilizing data and insights of how people are interacting with it, adoption, liquidity provided by stablecoins, how it's maybe going to be used in major institutions, maybe as well as like what is people's sentiment towards something that could help figure out what the price is going to be potentially. But I just think approaching crypto, utilizing our old thinking of how we approach stocks, will lead us, even if we pick something that is actually a high performing product, could lead us into a place, or lead some people into a place where they think you're having more rights and ownership over something than you would, because as a token holder and versus someone who's developing on it, they may have different incentives.
Could not agree more. I think it's important that people do understand what they're holding. I'll keep it simple, and do their own research and not treat it as a stock. Understand that there's likely a use case. Understand more about the community of people. Also understand more about the protocol itself. Read the white paper. Actually use the coin or token itself for its intended purposes. Don't just hold it on a centralized exchange. But Aave is a full protocol. You can borrow against your crypto holdings. You can give liquidity. There are many functions for you in the crypto space besides just holding. Although there's nothing wrong with hodling either, but the intended purpose is not just to hodl, but actually to use and participate.
You're right. Yeah, I think you're right about that. It's like figuring out coins maybe that, or projects that you want to utilize day to day, whether you were talking about the Helium Mobile. So that's something that's infrastructure that you're utilizing for your cell phone, and cryptocurrency is a component of it. There's so many things out there that it's not just about holding. So this is where I guess I would differ from a lot of the people in Bitcoin who are like want to hold Bitcoin, because my opinion at the end of the day is you're just hoping the price goes up in US dollars. So the idea, and I think that is leaning towards more speculation than investing.
Could
as
not
well.
agree more. I feel like we have given the Warriors and the Rascals more than we
Oh,
had intended. But
well, yeah,
let's
definitely more than intended.
let's make sure we give them let's make sure we give them everything um, before we go.
Okay, I know this. Shout out to the Jackie Chan cartoon uncle. He says, "One more thing, Jackie. One more thing off, or two more things." So let's take a look at, and I'm just gonna show this. It's like we said, this isn't financial advice or anything like that. I think I just wanted to show some of our top picks just to watch. And I think it's good. We talked about prediction markets. We talked about making predictions. And that's, I think, what this we can utilize this for. Your list, my list of things that we think that are cool, particular tokens out here in the space. Some of ours have a crossover for sure. But I just wanted to show this so we can have something at least live in the bookmark that we could look back on, and maybe we can check maybe in 6 months. I'll pull up a screenshot of what's happening when we take a look at our watch list and Binance, just to see how are things performing that we thought would perform mid-year, and we'll see what 2026 brings. But overall, that's one of the things I just wanted to highlight quickly for us to see.
I love it. Those are sort of top picks into 2026. So pause it there. Scroll through that list. Do your own research. But 2026 crypto is not going to die. It's just going to grow up. And what growing up means is that your hype dreams are over. You have to be more disciplined. You have to ignore the little bit of noise, as the media attention will not be on crypto, but there will be more capital at risk with bigger institutional players. Your opportunity remains, but it's only for those who are maturing with the markets and are understanding that there is structure over stories. Narratives are going to last weeks, not months. Retail will be late once again in 2026. So you have to ensure that you aren't chasing stories, that you aren't underestimating speed, that you are taking advantage of periods where BTC is down 30, 40, 50% or more, and your dollar cost averaging, because the market will be less forgiving. It will be less patient. There are big institutional players trading billions of dollars of ETFs, as we showed you earlier in the show. So hype tokens, waste their money. Those narratives are going to decay. Social media will no longer be the driver or arbiter of value for these markets. There won't be any second wave buyers coming to buy your bag. They've already been wrecked by Trump and Millennia token. They're done with crypto. So as retail liquidity disappears, developers get burnt out, incentives start to dry up. This is where market discipline will pay off in 2026. So those are my predictions for next year. I'm going to stand on those. I'm going to allocate my portfolio accordingly. And I plan to be in a better position December 2026 than I am in December 2025, although my position is just fine. But I'm always looking to grow and mature with the markets as it does, so that I'm not left behind chasing old narratives that are no longer relevant, as 95% of altcoins are going to be irrelevant in 2026. Good night.
Yeah, sorry about that. I don't know if my internet's lagging or what. I lost connection there, but yeah, you're definitely right there. I did want to show and just piggyback off of what you were saying. Amber Data, go check that out. We're not financial advice. We're just having a conversation, Jams and I. But go check out the blog from amberdata.io, the experts over there who will give you an idea of, maybe touch on some of the things that we've talked about when it comes to the pillars of building a resilient crypto portfolio, strategies for navigating market volatility. So moving into 2026, some of the things will be a repeat of the things Jams has said. I've not shown him this particular article, but I just wanted to give some insights into what the experts are saying with a lot of data behind them, data analytics platforms when it comes to data-driven diversification beyond market capitalization, which we did talk about at the beginning of the show, active hedging and downside protection, and then also quantitative risk monitoring and rebalancing. So go check out Amber Data for more crypto data, and this blog for some insights on those of you who do that type of investing.
I just want to call out one line there. It was really good to see them emphasizing the importance of cross-sector diversification. That's exactly what we were talking about earlier in the show. It's in pillar 1 up there. That's really, really important. That first paragraph is a more strategic approach involves sector-based diversification, where you allocate across different categories such as native layer 1 coins, governance tokens of DeFi protocols, and tokens representing tokenized real-world assets like real estate and commodities. That is generally exactly what we've been talking about in today's show. Letting the people know that our year-end revelation and prediction for next year is dependent upon this strategic approach itself, is identifying key sectors where you will see real growth, you have real revenue, you have actual total value locked, and you are able to hedge long-term by utilizing stablecoins, which I think is another huge point that we were making today. During periods of high volatility, moving a portion of a portfolio into stablecoins can preserve its value until market conditions stabilize. These assets are designed to maintain a stable value by backing them with a stable asset. So another way to manage risk in 2026, don't ignore the boring stable coins. They are your friend. And then adjust your portfolio. Have the conversations. Go back and look at Masari. Go back and look at DeFi Llama. If inflows are happening for 3 weeks straight, guess what? Price is not going your direction. You maybe want to rebalance some into stable coins to preserve value. So use your data points, understand that the markets have matured, break these markets into sectors, understand that they're not monolithic, look for blue chips, stay away from trash altcoins, and as we always say, hug your loved ones and tell somebody you love them.
Well said. Well said. All right, everybody. Appreciate y'all checking in with us on our channel and on the Warrior Crypto channel, Gentleman of Crypto. Appreciate everybody. Anything else from you, Jams? Thanks for the comments, Jake Fever, Bitcoin 4TX, and we'll catch y'all later.
Peace.
A new world order is upon us,
Oh, let me get the
but we have the capability to participate in creating